Hey folks, good morning, and we are here for another pre-US session, 31st of January 2022. So we are going to really have a look at this week in the context of Friday is going to be the best day to trade here, NFP on the radar. Quite slow action in these markets at the moment, namely the DAX is driving everything, resistance coming in 15 532s are one for me today, and I think we can pull back and range around here and probably have quite a tepid session without not discounting headline risk, of course. Some really good podcasts listening to this morning from The Economist and Daniel Jurgen, my favorite energy analyst. So I'm going to put that link out there on the video I did on Nat Gas on YouTube. So if anyone wants to check it out, it's there. And obviously for the guys in Discord, they're probably already listening to it. So let's have a look at these charts. What have we seen? Well, you're seeing generally, let's get the currencies out of the way here, and the euro. The euro on the daily, you're seeing that we had that push down through the target one spot, 1 to 125s. Little doji there on Friday, and we are now kind of bid back up, and it's going to try and reclaim the level that it's pushed through last week, um, on Thursday. Lovely trade from the FOMC there, short down, target achieved, lovely. So we're going to come back here and check out this area. Looking at this on a weekly bar chart here, you can see that this really is the area of the low, the 30th September 2019. Little did we know the entire globe was about to get rocked at that point, or soon after that point, and so stronger dollar, rate hikes on the horizon. Excuse me. With those rate hikes on the horizon, I do see a weaker dollar, and I don't think it's going to be too long before we're going to get down to one spot tens here, and quite a few FX strategists also earmarking that as a destination in the medium term. So, but right now, a little bit of retracing on last week's downside, I think, is on the cards here. So, what are we looking at there? Well, I'd be looking for weakness on the 120, 125s. Should we get back up there? There's a little bit of a zone as well here that I've marked out just to monitor for that weakness. So, if we do have mixed trade here, you could get short below the R2, leaning against this sort of line in the sand I have top left of your screen. That's the euro and the dollar picture, just to give you a show of the Dixie here. And here we are. Here's the Dixie. So, yeah, we pushed above that sort of double top high there. 96 spot, 94.21's pulling back now. I think it'll pull back below there and probably make a 50% or so retracement on last week's trade, and then we can kind of get on with getting on more highs in the dollar. Not this week, I don't think. Well, let's see. You can never discount anything in this job. So 97 spot 69s remains the target on the upside for this market. On the weekly bars, you can see this just above my head here. Let me zoom in on this area to tell you where that 97 comes from, and it's right here. See this treble top weekly 3 week highs here going back to, what was that, 2018 November, December, and then 2019 March highs. So really decent target for this market to get to on the upside. And I think, with rate hikes on the way, I think we can live above there as well this year. So that's the currency picture. So, looking at the NASDAQ and these US equities, we get the SPOOs up, and we'll look at the SPOOs on the daily here. And so you can see, well, let's get full screen with this. You can see here on the weekly bars, that pullback to the low of the week of the 19th of July last year was really that bounce point for this market. And up we go. Now, the 20 exponential weekly moving average does loom quite large above 45.30s, spot 66s. Before you can kind of dream about that level for the dip buying, um, to get out there after you've bought this big old dip here last week. you really have to look at price in 44.86 and a half, and so that is the interim target for this market, whether it's today or tomorrow. I think it's probably today. I don't see. I think it's going to be quite light trade today. What do we have on the slate? We've got. We're still waiting on German GDP, or sorry, Eurozone GDP. But German CPI, Chicago PMI at 245. Yeah, maybe. I think it's light markets, and in light markets, you can make pretty decent big moves, but are they sustainable? No, they're not. So I think there's general weakness in this market, but these are the key levels to be aware of. For the longs and the shorts, I would not like to be short above the 43.69s. I would be interested in looking at shorts once we trade the 45.30s. Even this market not being able to hold above 44.86 halves. Some nice shorts there, but at the moment you're going against a dip that is firmly being bought, right? So that's the SPOOs on the Nasdaq. On the daily, very similar stuff here, right? You see the channel that we fell out of in quite a fashion, I have to say here. So off the highs to that low was actually 18.27%, just 1.33% above what would have been a technical bear market, right? So just realized my camera was way over there. Yeah, I think we're on for the bounce. Look, target's 14, 8, 10, half here. A bit of a dodgy line in the sand above, which was actually good trading when we were around there a couple of months ago, and weeks ago. So yeah, look, resistance coming in there just really above at around what is that level? Around 1500s, yeah, around 15, or sorry, 15,000. Um, so do be aware of that. These are weekly bars, but you do get a nicer, easier view on these markets. Um, less trade frequency when you go out on the weekly bars. And the Dow, yeah, the Dow's funny old structure, really. If we go out on the weekly bars, you can see kind of just that compression area here. Um, from we're kind of just pennant formation here, and I do believe in my pennants, and I think we can range back up on this Dow. Some significant levels to be aware of, probably the 34,907s. You'll see some profit taking into that should we go bid, and the 20 EMA above. Um, Also, I think this area here it's going to be an interesting area, 35,312s to take some profits, and we're getting a grouping here really of a couple of moving averages on the weekly coming into play in this zone. So I think we could stay within that range for quite some time if we get in there, probably a couple of days, and finish that movement to the upside on the pennant. Um, yeah, that's really kind of it's that simple. I think you should always strive for simplicity, especially doing technical analysis. I know I've got a lot on these screens, but I think it's good to be contextually aware. So yeah, I look support on the pivot. I think above this line in the sand area to come in on the Dow, and yeah, we could probably get rid of this one here and just tidy up the chart. All right, that's it for me on the Dow. Oil, yeah, so a nice kind of setup on oil this morning, shorting. Well, it's really quite apparent on this chart. We did sort of drop down here to find the top of the gap open at 87.45s, right, and then we just rally back up. Nice short opportunity here on the top of this bar, back down into the gap, onto the top of the gap and down. I think the the gap close is now kind of starting to happen, but it just doesn't go from one side to the next in one movement, and that's where you get really cut up um, trading these gaps. So I know a few of the guys in the room taking advantage of that this morning. So well done. Um, but generally, I mean, look, I am the uber bull on carbon, as popular as that is, and it's certainly one way to not make friends. But yeah, look, for 90 spot 37 target remains. Really strong performance last week here. Probably scrunch this chart up a little bit more. Probably tidy up some of these levels as well. And yeah, the target remains 90.37s. And the big boy target for the big swing is 107 spot 74. Is that going to trade this week, next week, the week after? No, it's not, in my estimation, anyway. So yeah, that's it. Gold before I go. I know the gold bugs always love to have a look. Gold on the daily here. So I think, look, we have this compression area, right? We have this compression area, and I think we can trade it back on up here. So um, essentially this, right? So I think we can trade back up. We found that support on Friday's trade. So 1785 should be defended by the bulls, looking for 1800s and higher in this market, right? So I'll just get that different color on the 18s, which is quite an important level. And a really nice tight risk to be shorting off of this sort of line in the sand above there last week. And really, really nice technical trading opportunities in gold. But these are important levels, and to me, these are the ones that really just matter, and not looking at anything else actually at the moment on gold. So that's it. I think the bonds. Yeah, let's see how the bonds play out. I'm not really excited about getting long the bonds at the moment. Um, so we'll talk about that as we go through the week. All right, have a good session, and to the guys in Discord, I will see you at 1 o'clock. Otherwise, please do hit a like and subscribe button, and you get notified anytime we go live for some of these big events, and when we release some new content as well. All right, take care. Have a good one. Bye bye.